Hey everybody, Kimberly here. I wanted to introduce you to somebody today. I had the pleasure of being connected to Robert Band, who is a business finance expert. And we had a really great conversation a couple weeks ago, and I asked if he would be willing to come back and just answer some questions, really basic, some intro financial stuff. I feel like sometimes we focus a whole lot on the nitty gritty, and we kind of forget the foundational principles. And Robert has some really great stuff to share. So hope you enjoy just a little bit of crosstalk, right, between what you do every day and your normal website stuff that you typically hear from Valet. So I'd like to introduce you to Robert. Robert, would you like to give us a little overview of what it is that you do?
Hey everybody, this is Robert Band. I'm a business finance expert with more years of experience than I care to admit, but I got my accounting degree. I was a CPA auditor at a large firm for about 9 years, and then went on to controller and CFO jobs in corporate, a couple public companies, a real estate developer, and then had my CFO consulting firm for the last 9 years. Basically what I do is I help business owners of all sizes get their accounting and finance right. Having done this work my whole career, I understand that most business owners didn't study accounting. Some did, but it can be an arcane and somewhat complicated subject and part of the business. And getting it right is not easy. All the moving parts are not easy. So what I do is I advise business owners on the quality of their accounting and finance function. And then I let them know where they are on the scale, let's say of 10, as to where they need to be, where they are versus where they need to be, and then advise them and counsel them on how to get there. And so I've taken a lot of the friction away in terms of hourly consulting fees, and my mission is just to help as many business owners from startups to large companies get what they need, whether it's in terms of, we'll talk about some of the pillars of financial management, but basically that's in short what I do.
Awesome. Well, and that's a very much needed service, because I can tell you I have no finance background and I did not enjoy my accounting classes in college. So
you're not alone.
Right on. Awesome. Well, I appreciate that you actually mentioned the pillars just now. I'm a big believer in a strong foundation in order to grow something that works and that you understand. And I feel like finance would probably be the same way. So why don't you tell us a little bit about the strong pillars of growing your financial portion of your business?
Okay, well, the first is financial statements, and the financial statements come from the bookkeeping. So, your typical business starts up and the CPA stands up a set of books and maybe hires a part-time bookkeeper, and the transactions of the business, which is what accountants account for, are entered into these books, and the quality of those entries determines the quality of the financial statements. So I would say financial statements, number one. Financial analysis is behind the financial statements. So it's great to say, all right, well, here's my numbers, my P&L this year versus prior year, but what accounts for the change? Or why is my gross margin trending down when my sales are growing? And then getting behind that data is vital, because the financial statements are the most summarized view of the business. They are the summary of all the transactions in the books. And so to get to a drill down explanation of what's going on in over time in your financials, it requires good financial analysis. Another pillar is good internal controls. A typical internal control is segregation of duties. I did a blog a while back on, should you trust your bookkeeper 100%? And while I love bookkeepers, there is a need to not have all of your books and all your financial life in the hands of one person. So segregation of duties is a typical financial control.
Mm-hmm. Mm-hmm.
Cash flow projections is another pillar. So if one is launching a company or growing a company or trying to survive, they need to know what their cash flow projection is in order to determine their capital needs. How much capital am I going to require? And this is one of the main reasons companies go out of business, because they run out of capital. So without good financials and good analysis, good controls, and cash flow forecasting, it's very difficult for a company to succeed.
Okay, well, I already have anxiety with all of those, all those things you listed up, because I know the pain of trying to figure all that out, right?
Yeah.
So from there, and I guess this next question might support the follow-up would be, what's the cost of not understanding these pillars or setting up these pillars? What's the cost, and what's the biggest or most common mistake that you see that results from that?
Okay, well, the biggest mistake that I see is the accounting isn't set up right from the beginning.
Mm-hmm.
If you were to start a professional sports team, and you're the owner, the first thing you would do is hire a general manager. And that general manager would then hire a coach and a scouting expert. And in other words, that team would be launched and built from the top and then down. And that coach would then, and the recruiting expert would then find the players that the team wants. And so you have let's call it the C-suite from the very beginning, day one. And then these people are bringing in the rest of the organization. Usually companies are built from the bottom up. The owner launches a company, and within a short time, they need an admin assistant or a marketing assistant.
Yeah.
Of course, they need a set of books, and so they outsource. They may do it themselves for a while and then outsource it. But that C-suite is vacant until the company grows to a size where they decide to hire a CFO. But today, in today's day and time, these experts are available as consultants, and I would strongly urge companies to have as much of that C-suite from the beginning as possible, even if it's part-time. Now, the cost of not having a properly built accounting and finance department is that one day there's going to be a restructuring, because a bookkeeper will develop the books and will do as much as they can, but as the company grows, unless it starts the way I just described with a C-suite from the beginning,
right.
as the company grows, they're going to hire in a controller and then a CFO, and that person is going to say, well, we need to tweak this and redo that. And really, it's just hard to have the pillars of financial management, particularly the internal controls, which are so important, with just a part-time bookkeeper or even a full-time bookkeeper. It needs the high-level CFO, set of eyes to erect the financial structure and processes from day one. So,
okay.
Yeah.
All right. That makes sense. And I want to talk a little bit more about controlling and bookkeeping, but before we do that, you say all of these wonderful things that we need to have, and that there are pitfalls, of course, but how afraid should I be if I'm hearing you right now and you say there's been I know that I don't have these things in place. I know that maybe I'm not as good at them as I should be. And you say that there's going to be a restructuring that has to take place. How painful is that for me, really? I mean, how afraid should I be of that? Or is it manageable with the help of someone like you who can come in and sort that out?
Well, yeah. I mean, this is a technical area of the business, as is every area. Your area is very technical. It's something I don't know a lot about. I would have to outsource to you and get your advice. And so I would say that how perilous is it to live without this? It's perilous because one, you're going to take the long road if you don't have this financial structure and these pillars in place from the beginning. At the beginning it's small and these pillars are small, but to have that structure and scaffold from the beginning allows you to place more and more sales and more organization on top of it without it being a house of cards. So it's just like in your business. If I want a website and I want it done right from the beginning, I might as well just hire you for your consulting, and then after this development, I know you do development, and then support. I might as well hire an expert to do that, because far be it from me to know how to do that well. And then if it's built right from the beginning, then it can scale without having to redo it one day or strengthen it. And in the area of finances, if a owner is flying with a blind spot because they have not erected the accounting properly, and they're not seeing financials, or they see financials but they don't use them and understand them, or they don't have any analysis being done, and this is not easy stuff that just one sole bookkeeper may be able to do on their own. And so if they're riding with that blind spot, then they are probably experiencing sleepless nights, because they're wondering how they're going to meet payroll, or some customer hasn't paid and cash is tight, and all those things that keep us up at night. So that's why it's scary, and that's why it should be built well from the beginning.
I agree. I love, again, the idea of the foundation and building on something that has integrity. But what I'm hearing, at least, is that it's not scary if you have somebody that knows their stuff to do the heavy lifting. So you would do the heavy lifting for me if that was something that we needed to change around at Valet, for example. And so it would be less scary for me because you know what you're doing.
Yeah, I mean, you pay an outsourced CFO or somebody that has this expertise for as much or as little as you need. And I am a big believer that $1 spent on a CFO has a many times multiple return, because when you inject that financial lens into the business, and you have you're getting good financial statements and good financial analysis and proper controls and insight to explain to you and guide you, then you're going to travel a straighter line in your business than you would in a squiggly, circuitous way without that expertise. Now, one thing, another reason why an owner should care deeply about their books and their finances is that if you want your business to be a rocket ship, then cash is your fuel, but accounting is your guidance system.
Yes.
And if you don't look at your control panel, i.e. your financials and your financial analysis, you're going to take the long way home, and you may never get home. Go ahead.
Well, that leads me to ask, though, we spent some time a couple of years ago when we started looking at things like metrics and understanding KPIs and financial reporting. And there's a tendency to get lost in what one might call a vanity metric. You pull a KPI because you read somewhere that this is a KPI that you should look at, or it's something that you should follow. And without understanding, there's a relationship between the number, and without understanding what the relationship between that and the decision is, right? There's got to be some sort of decision behind why you're watching the number. And then the KPIs are kind of useless. So what would you suggest? How would a business owner like me, who maybe I'm looking at KPIs, I don't quite know what to do with them, I don't have a decision kind of tied to each one of those metrics that I'm looking at. How can a business owner like me get better at reading financial statements or looking at those sorts of indicators so that I can start to guide my ship where I need to go?
Well, business owners that use CFOs and CFO consultants or their outside CPA, that's how you learn. If you sit next to a CFO and they're reading your financial statements and they're verbalizing how they're ingesting it, and they go, well, and this happens with me all the time. I look at somebody's financials. I go, okay, your accounts receivable is $1 million, and your sales are $2 million. That means that you're collecting your receivables in 6 months. Right? So us financial people, we immediately, as we're looking at the numbers, we're interpreting and and we know ratios and we know, measurements. And so if you're having a CFO verbalize that as they're reading, you're going to go, oh, so explain that to me. What is accounts receivable turnover? How'd you get that? And you did that so quick. How'd you get to that number? And then that's how you learn. And so, yes, you're going to pay, somebody a bit for that master's degree, or that, graduate degree in finance, but that's how you learn. And then it doesn't take long. And then next time you look at your financials, you're going to remember, I need to,
Yeah. Yes, exactly. There's a tendency to get caught up. I think just in general, we've become super, super high in the consumers of scale of commodities. You want a thing, and value becomes an object that you hold in your hand or whatever the deliverable is, but you forget that there's still a huge segment of professional services like yours that the value comes from the knowledge and the experience that you have. And it may seem like a high, upfront cost, but what you're going to gain from that is incredible, as opposed to sitting down and trying to just tough it out, right? I mean, what's the actual cost of squandering your dollar, for profit today because you haven't had anybody in to help you manage your finances?
Well, I've had many clients where, they're so involved in their business, and, they came up with a business model, they raised money, they put money into developing their software or whatever, and now they're out to market, and it's the numbers they're losing money, and that one tip from a good CFO can be worth millions. It could either turn a ship around that, is not going in the right direction and never will because the margins just aren't enough. Or it could be an introduction to an investment banker that, puts millions of dollars in the owner's pocket. Mm-hmm. And, Warren Buffett, his rule number 1 is never lose money. And his rule number 2 is never forget rule number 1. And the reason is because $1 invested today is going to become, $1 invested today at like 10% will become like $75 in, X number of years. Mm-hmm. And you take a company that's doing $1 million a year, if they let $10,000 fall through the cracks, that $10,000 today would be worth hundreds of thousands in 20 years. Right. And so every dollar matters. And so anything that can be done to grow sales and reduce costs and preserve and protect that bottom line is going to amount to hundreds of thousands, if not millions, over time. So, that's why a business owner should ensure that their accounting and finance function is strong, mm-hmm. so that they don't let current year profits fall through the cracks because of the future value of those profits.
Right. That makes so much sense. There's just this exponential trade-off over time. I get it. So we talked about the pillars, and you mentioned a few functional roles within making all of that happen, kind of executing it out. So I'd like to ask you a couple questions there. And I think first it would be interesting to talk about the role of controller. So we mentioned bookkeeper, controller, and CFO. Let's talk first about controllers. What are they, and what is a practical example of what that might look like for a small business?
Okay, well, there is a lot of misnomenclature within businesses. Business owners call their bookkeeper their CFO or their controller, and so the accounting organization chart has the bookkeeper as the foundation. the bookkeeper is recording day-to-day transactions, which is the AR billing, the AR receipts, posting cash receipts, processing accounts payable, both the inputting the AP bill and getting it paid as a cash disbursement, and the payroll.
Mm-hmm.
So the bookkeeper is booking all these transactions. And a lot of bookkeepers are either self-trained or they receive some training. So they got training from, let's say, the next level up, a controller. A controller is somebody who owns pretty much all of the accounting and reporting and analysis. And they oversee the bookkeeper, and they oversee accounts receivable, accounts payable, payroll, financial reporting, internal controls, and they're also usually very technical or technological owner of the software that the company is employing, whether it's the accounting software and how that integrates with the front-end software, because most businesses have multiple software.
Right.
And then the CFO is on top of that controller, and the CFO is two things. One, oversees the downline of the accounting and finance function, as well as is the strategic advisor to the CEO. So a good CFO understands the business and the industry and the company's position in that industry, and what opportunities are possible either through mergers, acquisitions, just organic growth, and then make sure that the accounting and finance function of the business is strong. And there are many parts of that accounting and finance function that we've touched on. And so that CFO is the leader of that function and making sure that all that goes below is done well.
So everybody has a job, and there's a place for everything, and everything in its place. I like it. I like it. That fits my need to organize things nicely. So,
that's what.
Well, Robert, I want to thank. Right, exactly. It's what you do with numbers. Literally. I like it.
We are accountants, and what we do is we categorize things. I'm not sure why we weren't called categorants, as opposed to where accountants came from, but we account for things.
Right. I love it. It makes even more sense now. It makes even more sense. Well, I really want to thank you for taking some time with me today. And I would like to offer anybody watching, you need to pay attention to financials. They're so important, and they are the driving force behind your business, and they can help you make decisions that you may be stalled on. You don't quite know which way to go next. So maybe you haven't done any sort of a financial audit recently, and so it's a good thing to do. I'm going to put Robert's information in the post. Please reach out, have a phone call. This guy is incredibly smart, and he's so easy to talk to. You'll definitely get some value and benefit out of it, no matter what you're looking for. Robert, thank you for talking today.
All right, nice being with you. Thanks, Kim.
You too. Have a great day.
You too. All right, bye-bye.